You better drop everything you're doing and pay very close attention to what I'm about to talk to you about. Those who are the impatient and want the bottom line out of the way real quick, I expect the market to see a significant downturn and a significant movement downwards within the following sessions. And that should be enough for you, those who are the impatient and want the bottom line out of the way, and those who really want to understand what's going on and why I'm saying what I'm saying. Definitely lock and load, ladies and gentlemen. Stay with me, focus. No need to like, subscribe, don't do anything of that sort of sort. Right now, focus on what I want to show you right now. Most people tend to cry about how come the market didn't warn us? How come the market didn't ring the alarm bells days before the drawdown has started happening? And how come we always get caught by surprise by these things? So the problem is most people do not use nor understand the tools that we use in my community, which at the end I'm going to mention that for a little bit. Shout out to all you beautiful legends and to all the new members of the Academy, the Patreon, and anything in between. Now, if we look at the 1 minute, we're obviously not going to have much of a perception on where the market is headed, because we can pretty much determine, given the momentum, given the forces that we're observing right now, not that far off. If we look at the channel, we've been working our way throughout the day today. We are pretty much within the very same channel, so we cannot say we have done a lot. It appears to be that on the 1 minute, we will probably stay within the framework of this channel. Maybe we're going to test 7,412 right there, as you can see, as a previous level that was established via a gap, although I have mentioned how gaps are unimportant nowadays and they do not lead, they are not the motivator, not necessarily, of where the market is headed. As you can see, we have gaps above us, gaps below us, and the market now is far more moving downwards in a determined fashion simply because of the cyclicality. Here is a fine example where it's tremendously important to understand how the cyclicality works, why it works the way it does, what are the forces that are driving it. Now let's go to the 5 minutes. On the 5 minutes, we can see we are becoming a little bit more bearish. And in fact, we have been already locked into this bearish channel that have been generated via the recent thresholds, via the recent points of congestion and retest that we have had recently. Now, if we pay close attention to what's going on, we are also very much subject right now to the median of the channel. You can kind of see how the market has respected and followed, or rather relied on this channel to be a almost of an artificial shelf, whether it is in this case a support and then a transition into a resistance, then a breakout and a support again. And right now you can see we are now retesting the very same ranges, so it's not going to be all that far-fetched to expect 74.36 as well. Since we are in a very tight range, or rather very much close to it, and still have a little bit of bullish momentum, as you can see, for example, right here, this is very much indicative of a turnaround that is potentially going to occur within the following 30 minutes. So that leaves us with about an hour of price action. And so potentially we're still going to find ourselves moving higher and retesting what we found to be the median right here on the 5 minutes. As you can see, that median range, that center range, we are right pretty much below it. And given that a little bit of bullish momentum, it's not going to be all that surprising if we're going to end up testing this range. But if we look further out, rather over the 30 minutes and actually glance into the 45 minutes, we realize we still have a little bit more bullish momentum. So if we look at the current channels, if I will be able to get them, here we go. You're going to realize we already slid out of the current channel, and we are now making our way into establishing a new form that we're going to be moving within, or potentially moving back inwards into the channel. This bullish momentum that we see right here on the 45 minutes, very much indicative of a potential reversal and a retest of that very bottom range. Irregardless, it does not appear to be enough to make it beyond. Arguably, it is even very difficult to determine we have what it takes, given whatever what is left from that bullish momentum, to actually make it back to that bottom, that support. And in fact, it appears to be that we are far more likely to stay within the framework of the sideways, the horizontal channel. You can see right now that blue and red channel, that we are in fact right now in the bottom range of. As you can see right now, we're far closer to that bottom range, and it's far more likely for us to stay within that framework, maybe even still retest these that range between 74.3902 or 74.72.78, basically this range. Those who are not sure what I'm talking about, right there you can see the price ranges. I'm talking about this potential range, which could be the next following range within which we're gonna stay or dwell a little bit, given that bullish momentum we see on the 45 minutes. We're pretty much looking from today into tomorrow's session, or maybe some of that momentum that's being gathered towards the post market. Depends on how volatile the post market will be. I'm not even going to mention and talk about how there were multiple missiles shot again at us, Israel, from Iran this time around, from Yemen. The Houthis are back in the picture. All of it is just noise, and I told you from the get-go that this is how things are gonna will play out. And we couldn't, nor should we, expect from the IRGC to play by the book or really respect any common sense behavior. And eventually they will capitulate and will start firing back, misbehaving as we've already seen them in the recent days. And my expectation is that things are just going to deteriorate from here on out. Although I'm not gonna preach here on what my expectations are from Trump's next tweet or the IRGC's actions. In fact, simply what we're gonna do is follow the breadcrumbs, if you will, of the technical analysis. Now here on the 1 hour, this is where things get a little bit more interesting, and I've showed this to my community. I've highlighted how we are now transitioning. In fact, we are now below the 50 range, so we're in fact bearish, and more so we now become bearish dominant with our directionality, with our actual moving force. So which is, as you can see right here, that moving average basically highlights how we are losing speed, losing momentum in our industry, in our business. That means we are headed downwards. So Greg, what about all this bullish price action that you said and talked about? Yes, that may play out still between now and the end of the session, maybe a little bit into tomorrow, but the bigger picture is that we are turning around and becoming a lot more bearish. In fact, the weight of what we see at the larger time frames, the bigger picture, is far more indicative of a pullback, of a downtrend, and not a correction upwards. So even though we have the smaller time frames indicative of some bullish upwards momentum, this all can be mitigated via the strength and the weight of the larger time frames. Okay, I hope that's clear so far. Pretty simple. This whole business is actually pretty simple. You have to always look at the more longer duration predominant force that takes dominance at the time and realize the directionality given the structure of support and resistance levels we have at hand. So overall, the equation is pretty simple. As you can see, I already drew for my community, for my students as well, for them to see how we expect some form of a misbehavior, the same way we have corrections. And if this was an uptrend, well, rather it was an uptrend, as you can tell, within it we still have downtrends. So the same way that on a downtrend, now we're going to have corrections and some temporary uptrends. And so this is what I'm trying to show, how we're going to have pretty much the equal harmonic structure right here on the right side. Those who misunderstand this at their own will and their own whim, at, some arbitrary way for some reason. No, it's not going to be equal. No, it does not have necessarily retest the precise support and resistance levels, nor does it have to be parallel on the grand scheme of things. The overall expression is far more likely to happen and occur here, and especially the indication that we're seeing with the turnaround on the 4-hour time frame, which is almost indicative of the daily chart. Basically 2 candlesticks of the 4-hour are a conclusion of the daily, put together the 4 hours, make a daily candlestick. And so what we're seeing here is a potential turnaround, which does confirm what we've seen on the smaller time frames. So what are we actually seeing? We're basically seeing some stagnation, right? Within these ranges around the 7,439, as I've highlighted earlier. But we also potentially are seeing the signs and with the hints of a pull up, a rally, a temporary rally, a corrective measure, because we have had a significant pullback, and now we are bound to see some mitigated relief rally. That would be the best sort of terminology without using something like a dead cat bounce, okay, which I really dislike. But pretty much that is what we're saying is gonna probably take place here. It does not have to be equal nor parallel to what we have on the left side. This is an overall general guideline of what we expect of the price action to happen. In fact, as we know, the price action tends to drop far faster than appreciate. Well, depreciate and appreciate, basically drop faster than rally higher. And so when we see a pullback, a drawdown, a significant one, don't be also surprised if the momentum is also very swift, and thus what took the market on the upside multiple days, as you can tell, because now we're on the daily chart and every candlestick here now represents a day movement, a day's worth movement. And so as you can see, it took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 ish candlesticks to create the structure. In reality, we can have almost the parallel equal, relative parallel equal right here on the right side play out within mere days, within a couple of days, maybe 3 to 4 days, which will make this roughly half as long, so twice as fast basically. And so in other words, something that is twice as fast is also a lot steeper. So get ready, we might be seeing a lot more of a significant drawdown on the bigger picture. That means why? What are we looking at the bigger picture? Because here on the daily, we realize we already crossed the 50-point range, the 50% range, and anything and everything that happens below it. And as long as we are bearish dominant, as you can see the red line right now on top of the green line, indicating that we have a lot more bearish sentiment and a lot bearish momentum within the system right now. So don't be also surprised, even if we're going to have some interference, some noise internally right here. On the grand scheme of things, right now the market is indicative of a continuation downwards, which right now seems to be the overall nearest destination, should be roughly within that vicinity of 7,300. As you can see, we have a set of white lines right here that I've highlighted, a narrow range, which basically is the bottom, the support of that entire shoulder we had on the left side. And so it's most very likely that we're going to see the market at least acknowledge these levels, and given the conjunction of the median of the channel that we have right here, we see a very wide channel. Here is the bottom of it, here is the top of it, and what we are seeing is a potential crossover of the two forces right here. Sort of a meeting of the forces, so it's not going to be all that surprising if we're going to stagnate and retest potentially the very same levels that already played a significant role in the past. Now, if we go to the weekly, which is where the broader picture starts to open up, and we understand that, wait. Even though on the daily we are seeing a potential drawdown, how significant is it? Well, quite so. The reason I've been saying and touting that the market will have, of course, I know that looks mad to all of you, so I'm going to try and make it a little bit clearer. As you guys can see, right now everything we've been discussing is locked away within that peak of that head. If you pay attention, that is the head. Right here we have a shoulder. And so what we're far more likely to see, given this structure, as you can see, on the uptrend we had the bearish dominance, the bullish dominance, and now we're transitioning into bearish dominance, which is indicative of a back-end negative correction. Now some would argue, oh Greg, how do you know that's not going to be very shallow and temporary? Well, pretty simple, because there is a bigger picture here at play, that we are and have been in a downtrend for some time now. And in fact, this is a temporary relief sort of a rally that you're seeing internally, but if you go to your 3 months, you're going to realize that we have turned around and become bearish for quite some time now, and basically this entire quarter is a turnaround quarter. And since we are closing and we have only 22 days till the end of the quarter, it's far more likely that we're going to see far more bearish tendency playing out from these smaller time frames that we're already seeing some significant bearish weight coming in. So don't be surprised. My bottom line and bottom point here is that the market has been screaming and signaling, ringing the alarm bells, in fact, for days on end. It's just that you are ignorant and maybe bias, and so ignoring the actual thing. Not just ignorant in terms of knowledge, but actually ignoring the signs and the signals that the market has been putting out there on a consistent basis throughout the recent couple of weeks, and indicative that it is pretty much gonna go down sometime soon. And you can see, in fact, on the quarterly, we already have been seeing that this entire quarter was all about the turnaround. And now people are suddenly being all surprised. How come the momentum is bearish? Well, the market has been touting and saying that for some time now. All you have to do is pay close attention and remove your biases. So, again, shout out to my community members who were absolutely up to speed about everything that is playing out and how it is playing out and why it's playing out this way. In fact, as you guys all can see, I'm going to put it on the screen right now. Here's my Discord where I was posting for my members the charts ahead of everyone else. So yes, my community is always first to know. That's just one good reason why you definitely want to join. Of course, showing and explaining various support and resistance levels and various other assets that we talk about right now. Actually, for example, it's plug, not just the S&P and the overall directionality of the market. In fact, as you can see already on June 4th, so basically several days ago, I've already been last week I've been showing my members how my expectation of the market is to have a significant drawdown towards 6100, and I already made a handful of videos talking about these things all the way from a couple of weeks ago. Of course, as always, people prefer not to watch these because it's not the popular opinion, and it's quite unfortunate because these very same people very soon are going to be crying, how come I didn't know? So here you go. This is another warning for you. And of course, yes, join the community. I highly recommend joining the academy. All the tiers are still highly discounted. I'll be basically the discounts are simply going to be expiring sometime shortly, and this $10 tier, which is an introduction tier, lets you sort of enter the Discord, get to know the environment, access some channels, join in some meetings, and get a broader idea of what technicals are all about. Of course, be all up to speed about what my analysis is, what our discussions in the community are like, what do we think the market is about to do based upon that very same technical analysis. I recommend joining right now before the discounts expire. And of course, I still have several spots in my one-on-one academy where I actually tutor you and teach you one-on-one how to be your own independent analyst. This is a true skill set. Do not miss out on this. Plenty of my community members don't even need me. Some of them don't even join the meetings, just here now and then to say hello, but otherwise they're their own independent analysts and understand where the market is headed without watching anything that I post. You want to be like that? Join the community, understand what it's all about, and if you really think it's appropriate and suitable for you, hit me up. We're going to do a Q&A meeting. I'm going to ask you some questions. We can get to know each other a little better. And if you do qualify and you have what it takes and you really have the serious need and want to succeed at this, I'm more than happy to onboard you into my community, teach you all about this. And of course, with time, you're going to be able to be a true independent analyst for your own self. Not going to be just as I've described for my own members. Now, ladies and gents, that is all I have for you today. So the broader picture, those who misunderstood yet, we do expect the market to continue going downward significantly, even though not right away. Those who misunderstand, watch this entire video and probably, quit somewhere halfway. It's the same thing as reading every fourth page in a book and then at the end being surprised you don't know what the book is all about. So I highly recommend, instead of watching this on double speed and then being surprised again you didn't understand anything, focus, watch the entire thing fully if need be to understand what it is that I'm trying to highlight here. And even if it's not going to happen right away tomorrow or even today exactly as expected, what I've been showing here is overall general guidance. For you to be up to speed, you need to be a part of the community and see how the changing conditions, the traffic on the road, so to speak, changes on the go, and as we adjust according to what we're seeing with these conditions, with traffic conditions, so to speak, an analogous of the market ebb and flow, that day-to-day price action. Now that's it. Like I said, ladies and gents, join the community so you'll be in the know. Now I gotta run because I gotta tend to my community, and I'm pretty sure we're gonna have some really interesting questions today, given the geopolitical tension that is happening right now. IRGC, America, Israel, all of us right now seem to be standing at the precipice of a full-on continuation of the war. Of course, it may die down for a little bit, drag on for a little bit, but at the end of the day, those who understand the fundamental situation here and the sides at play understand that these sides are opposing fundamentally and will never agree, will never come to an acceptable agreement by both sides. And both sides are aggressively and at least arguably one of the sides is legitimately fighting for particular things. For example, the extraction of the active material, the uranium, from Iran, so it cannot be used against the overall, global populace in the future, which makes total sense. So there's a lot still on the table, ladies and gents. Don't be surprised if this thing will drag on far longer than anyone expects. That's it for the last time, I promise. See you in the community, or see you in the next one. Bye bye, ladies and gents.